Every Friday, a free report is published that most retail traders completely ignore. That is a mistake. The Commitment of Traders Report, the COT report, is released weekly by the U.S. Commodity Futures Trading Commission, the CFTC. It shows how different groups of traders are positioned in the futures market. For Forex traders, that matters. The futures market and the spot Forex market move together. When large institutions take big positions in currency futures, those positions reflect real money behind real conviction, and that often shapes where price goes next. The report breaks participants into three groups. The first is commercial traders. These are large companies hedging real business risk, a multinational protecting itself from currency swings. Because they hedge, they often trade against the trend. They are not useful as directional signals for most retail traders. The second group is non-commercial traders, hedge funds, large money managers, investment banks. These are the ones trading purely for profit. This is the group worth watching. Their net positioning, meaning their long contracts minus their short contracts, tends to reflect and sometimes lead major currency trends. The third group is smaller retail participants, generally less informative for trend analysis. You can find the raw report on the CFTC's official website. Most traders, though, use free charting tools that display the data visually, overlaying COT positioning directly on a price chart. That makes it far easier to spot trends and extremes. When you study the data, focus on how non-commercial positioning changes week over week. A single snapshot tells you little. A trend in positioning building over several weeks tells you something real. Rising net long positions suggest growing bullish sentiment from large speculators. Rising net short positions suggest the opposite. There are two main ways to apply this. The first is as a contrarian signal. When large speculators reach a historically extreme net long or net short position, the market may be nearing a turning point. If nearly everyone is already positioned one way, there are fewer participants left to push price further. A reversal becomes possible. But be careful. Extreme positions can hold for weeks or months before anything changes. Never act on COT data alone. The second approach is trend confirmation. If price is rising and non-commercial positioning is steadily growing more net long over multiple weeks, that trend has institutional weight behind it. If price is still rising but large speculators are quietly reducing their long exposure, that divergence is a warning sign. Trading always involves risk. Use COT data as one layer in a broader framework, not as a standalone signal. Here is your practical takeaway. Each Friday after the COT report is released, note the net non-commercial position for the pairs you trade. Track whether it is building, shrinking, or at an extreme. Over time, you will develop a feel for what normal looks like and when something is out of the ordinary.